Dating the rate is the oldest trick in the book. I mean,
what does that mean?
It means buy now, refi later. And Florida has this thing called a 2-1 buy down, where you can get a 2-point buy down on the rate for the first year and then 1 point for the second. And by the third year, by then they'll have broken the economy and interest rates will be back in the fours.
You're hoping.
It's a gamble. Ooh. It's a huge gamble. Can you tell us about the 2-1 buy down? Are you doing that there? Are a lot of people asking for that?
Yeah, so we're a full service broker. We have over 50 different investors, and a handful of our lenders are offering the 2-1 buy down now. I personally think it's a fantastic product. I've closed several of them already. And like you said, to get 2% off of the going rate for the first year, 1% off the second year, very likely will have refinanced within the next 12 to 24 months. So I think it's a great opportunity for those that can get the seller to cover that cost for them.
So the seller's paying for the buy down?
Yes.
How much does it cost them?
So it depends on several factors like their credit score and the loan amount, but it's generally right around 2% of the purchase price.
Back it up. The seller's paying, but it's based on the buyer's credit.
Yes. So the actual cost, because the cost is tied to the interest rate that the buyer qualifies for. So like if they have lower credit scores, their rate would be a little bit higher. They would need a slightly larger credit to cover it. But for the most part, it's right around 2% credit that they would need from the seller to cover that.
2% sale price or mortgage amount?
Purchase price.
Ooh. How much were they putting down for these? What are we doing there? We're talking 3% down, 5% down, 20% down? What are we talking?
Yeah, so it doesn't impact the down payment. So if they were doing a conventional loan with 3 or 5% down, they can still do that. And then the seller credit would just cover the cost for the temporary buy down. Yeah. One of the cool things with that, though, is that with the temporary buy down, if you sell or refinance within the first 24 months, that unused portion you get back as a credit off of your payoff. So if you just pay standard discount points, that money's gone after you close. With the temporary buy down, it's able to be recovered.
Really? That's extremely interesting. And actually, I kind of like it. I like it. I think if I was going to buy a house right now, I would do that. How many of the sellers are willing to pay that 2%?